Hey, good evening, everyone. This is Sam, and I'll be doing the free video for April 30th, 2021. So I just finished recording the premium video for the members in the Gold Room. I'd like to show you a little bit of a preview as to what we talked about. Last week we said, Google and Amazon into earnings. Google ended up being, the better pick. That's what we focused on, and it ended up being a pretty good call. John in the room ended up doing some trades on that for earnings and absolutely killed it. So everyone who was in the Gold Room who took his trades on Google did very well. This week is a little bit different. So like I said, I just finished recording the premium video for the Gold Room, and in those premium videos, what we do is we basically look at everything, right? We look at the indices, we look at world markets, we look at currencies, we look at commodities, we look at VIX, we look at individual sectors, right? And the reason we do that is we try to kind of have a top-down approach, almost as if you were standing at the top of a building, kind of looking down and seeing everything and seeing how everything is aligning. And this is the first time in 2 weeks that I actually haven't seen a whole lot of alignment going into the next week. So that's going to be what the focus of this video is going to be. I'm actually going to share my watch list with you. So I won't get too deep into it, but you can always take a screenshot and kind of check it out on your own. But I do want to show you two things here. One is going to be in the SPX. The other one is going to be in VIX. And these are just early warning signals. Now, again, this may be early in terms of warning because everything is still structured, right? There's no issues in terms of the SPX structure. The VIX, it's still well contained, but it's a dramatic change from what we've seen in the last 2 weeks. So let's go ahead and dive in. So the first thing I'd like to point out here on the SPX is you have this previous high, right? Always read your charts like a book from left to right. And if you do that, this is your first intermediate high before the pullback. So that's the high that we reference. When you put a line across that level, you can see that it was resistance, 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 and then you closed above. Pretty good action, right? That would be pretty bullish. What would not be bullish? What's not bullish is closing back below that level, right? Which you did today on SPX. I'm getting a couple of early sell signals here as well. Which can be an early sign of a concern. And then over here on the weekly time frame, you now have two sequential nominally bearish candles. Now, you don't, again, have a trigger for those bearish candles on the weekly, but you are 2 ATR to the upside, right? Basically 2 average true ranges to the upside, which can limit your upside movement from here. And then you have a little bit of a hanging man candle there, followed by a little bit of a shooting star candle here. Neither of which is confirmed. What would confirm it is either A, a close below the low of this week on a weekly close, or B, bullishly, would break the pattern to the upside if we closed above the highs. As of right now, you don't have confirmation to the downside and you don't have confirmation to the upside. So just a little bit of a kind of a waiting pattern on SPX. Now, in terms of structure, I do have to acknowledge, the 8 is still intact. Nothing wrong there. The trend oscillator, 100% intact, right? You can see the green line is over the red. Both are above the middle. You do have on the 195 chart, which is kind of a very low-key, very interesting and good time frame, 195 minutes, you get 2 equal bars per day. Not a lot of people know that. And here you're holding the 21, which is exactly where you should be holding, and you have an upward bias to the squeeze. So from a structure point of view, completely structured, but I'm seeing a couple of warning signs, primarily the potential of that one right there, that make me just take a little bit of pause, right? Make me just pause just a little bit and say, okay, there's not a ton of edge with this setup. Let me potentially see another card. Here's the next warning signal that I want to show you. Now, again, these are very early, and if you're conservative, there's no action to take. If you're aggressive, then maybe you could start putting on a couple of low-cost shorts, or by and large, what I would mostly suggest for most people is actually lightening up a little bit on positions until clarity returns to the market, long or short. So on VIX here, there's 2 conditions on the VIX that concern me. The first is going to be when it's at the upper Bollinger, right? And that's usually a buying opportunity. Or when it's at the lower Bollinger, it's usually a good opportunity to sell or to put on some protection. Right here, right now, I don't have the Bollingers up on my chart. However, I don't believe that they're much of an issue. The second condition that I would be concerned about on the VIX is actually when the squeeze goes positive, right? So when you've been in a downtrend, and let's zoom out, when you've been in a downtrend that then coils back up and the squeeze goes positive, right? So here you have a downtrend in the VIX. Notice that the downtrend has shifted to sideways. This is a shift. This is a downtrend. You now have sideways range. In doing so, all of this negativity, you see all that negativity here? It's draining out, draining out, draining out, draining out, and then you get to a nice flat reset. Now notice that the reset point is actually has a little bit of a dot to the upside here. Okay. Also notice that this indicator's gotten above 50, and then over here from the inside out on the hourly, the trend oscillator is green above red, even though you do not have trend here. Right, this is still just range trading. So these are just early signs that the VIX could potentially pop off here to the upside. Now, I do have to say this. The VIX is in a downtrend. By and large, the high probability bet for most squeezes in trend is that they will build and then fire in the direction of the trend. However, I'm seeing enough small clues here to give me pause on that and to say, wait a second. The probability is that this breaks lower, but I'm seeing enough here to actually justify that it actually could break higher. So it's a big warning sign. So just two warning signs for you to be aware of going into next week. One is the setup on SPY and SPX and really market wide, because that is essentially a snapshot of the entire market, the SPX. And then two, and arguably just as important, this high compression squeeze on the VIX, from which you get big moves, big drastic moves, right? So the edges at this point, if we think about this like a card game or, blackjack or something like that, last week was probably, we had a 10, the dealer had a 6. That's a huge edge, right? You want to double down on that and hit it hard. This week, going into next week, I'd say that we probably have a 6. The dealer probably has a 9, right? So it's not as there's not as much edge there. Can you still beat the dealer if you have a 6 and they have a 9 and you have one card left to go? Certainly, anything can happen. But looking at the situation as it faces us, the edges, in my opinion, are nominal, and I think we're well served by waiting for a better situation. So with that said, let me just quickly show you the notes here that I shared with the gold folks. Going into next week, we are seeing drastically different signals than before. The signals are not overwhelmingly bearish. You should not freak out. However, the edge is much less than it has been before. The risk seems asymmetric, meaning that there may be 5% upside from here, but there may be 15 to 20% downside. When the charts lack edge, word of the day, and clarity, it is okay to hang out on the sidelines and trade smaller and faster until you get better signals. You have to adjust your style to dance with the market, the music that the market is playing. So let me share my watch list with you. Feel free to take a screenshot of it. So this is my watch list for next week. I just ran it at the end of market close today. This looks for kind of a proprietary signals of squeezes, structure, and early momentum. Now again, you will want to run these through your own analysis and see which one of these fits best with your work. But this is what I got for you. I'll even zoom in a little bit here so you can get a better view on YouTube. And I'll leave that up for a second if you want to take a screenshot of it. So these are going to be the stocks that I'll be kind of reviewing this weekend, but I'm also approaching next week with a little bit of caution until we get a little bit more clarity from the SPX and the VIX signals. In the event that the VIX signal fires long, then you really have to be careful because we're very extended on the indices, and if the VIX signal fires long, it probably has a few days of upward bias to it, which typically would cause the indices to come in some. So that's what we're approaching next week, guys. If you like what we're putting out there, if you want to be a part of the Gold Room and kind of see these big picture views that we put out there, these videos are an hour long on Fridays. I think a lot of people get a lot from them. And we try to give you guys a little preview as well. But if you want to be a part of that, come and check us out, simplertrading.com. We'd love to have you there, grow the community. It's a very tight-knit community of traders. We trade live. We interact with you guys all day. We share ideas. We give you ideas. You give us ideas, and we all try to collectively make money together. And it's really fun. So if you have a chance, come and check us out for a trial at simplertrading.com. Before you close off the video, make sure that you subscribe to our channel. It really does help us kind of get our message out there and allow a lot more people to see us. So make sure that you subscribe. And also make sure that you leave us a thumbs up or a thumbs down. Just let us know you were here, and a comment as well if you have any questions. And we'd really appreciate it. It tells us that you were here, and that you enjoyed, or that maybe you did enjoy. That's okay too. That you enjoyed our content. So just let us know you're here. Leave some footprints, especially if you found the video helpful. All right, guys, that's my time. Thank you very much. Have a great Friday, great weekend, and we'll see you for the next video next week. Cheers.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me